Hi, this is 2022 ALL company account discussion. First one, the inventory given the cost and the NRV. So what they did, they recorded uh, the cost and NRV. They recorded NRV as their lower value, the total NRV. But they have to apply it item by item basis. Instead of that, they recorded the total cost and the total NRV. So total NRV is my lower value. So they recorded inventory as for this 3250 and they did a stock return of 100. But based on item by item method, you have to compare the cost and the NRV from item to item individually. So item A, the lower value is 1250. So in the SOFP, you have to record item A as 1250. Item B, lower value NRV. So in the SOFP, you have to mention it as for the NRV value. Item C, also NRV is the lower value than cost. So in the SOFP, you have to mention that value, right? So the correct value you have to mention in the SOFP is 2900, right? So they already recorded stock written off as 100, but the correct stock written off is 450. So the difference you have to add to the other expenses. And when it comes to the compensation, the court order was given on 1st of May 2022, but these statements were authorized by the directors on 1st of June 2022. So the court decision was received before authorizing the financial statements, right? So which means you can adjust the compensation for 700. But they already recorded compensation as 500 in the other expenses, so that's appeared in the trial balance. But the correct employee compensation is 700, so the difference you have to add to the other expenses. And the provision for employee compensation you have to mention in other payables. These are my two books that I already published. So each book have 25 questions, activities. So you can do by yourself, check the answers, and is there any clarifications or uh, discussions you need, you can go to my YouTube channel and then find out the activity video and then get the uh, clarification, right? So if you want to purchase these books, just send me a message through WhatsApp. Adjustment number 3456 is related to the property, plant and equipment. So here the land, buildings, motor vehicle, office equipment is given, cost given as a closing date, and accumulated depreciation given as at opening date, right? And all property, plant, and equipment are used for admin expenses. So these depreciations you have to record under administration expenses, but we have to consider these adjustments before you are finding the depreciation for the current year. So buildings and motor vehicles, they are going to reevaluate for the second time as at closing date, and you reevaluate these buildings and motor vehicles for the first time on 31st March 2019, right? So buildings 25,000 balance and remaining useful life is 25, so the current depreciation is 1000. For motor vehicles, value 15,000 divided by 6, 2500. And these two are depreciable property, plant and equipment. So first of all, when you are doing the reevaluation, you have to transfer the accumulated depreciation from bottom to up. So your buildings accumulated depreciation is 3000 and the motor vehicles accumulated depreciation is 7500. So these amount you have to transfer from bottom to up to find out the carrying amount. So buildings 25,000 minus 3000, your carrying amount of buildings is 22,000. So 22,000 worth buildings you are evaluating for 20,000. So there is a revaluation deficit 2,000. So when it comes to the motor vehicles balance is 15,000 and it's already depreciated 7,500. So the carrying amount of motor vehicle is 7,500. So 7,500 worth motor vehicle you reevaluate for 7,000 and there's a revaluation deficit 500. But from the first time is revaluation, buildings revaluate surplus is 5,000, right? So first time there is a revaluation surplus, and for the second time there is a revaluation deficit. So the first time revaluation surplus you have to written off from the second time revaluation deficit. So that 2000 you have to minus from other comprehensive income as seen revaluation surplus written off, right? But motor vehicles, the first time there is a revaluation deficit, also for the second time there is a revaluation deficit. So nothing to written off over there. That total revaluation deficit you have to record in other expenses, right? And when it comes to the office equipments, you purchase new the photocopy machine on 1st of October, and you dispose another 2000 worth of office equipment on 1st of October. So you have to find out depreciation for office equipment. There are three types of office equipments. So 6,500 worth of office equipment you have from 1st of April to 31st March. So 20% 1,300. And 1,500 new photocopy machine you purchase on 1st of October. So you have to find out depreciation for that only for last 6 months. So 20% into half, 150. And that 2000, the disposed office equipment you are disposing on 1st of October. So you have to find out depreciation for first 6 months. So altogether, the total depreciation of office equipment is 1,650, right? And that sales proceeds you have to deduct from the other income, because that office equipment sales proceeds they recorded in the other income, so you have to deduct that. So so office equipment disposals, there is no any profit or loss. So that's it for the proper plant and equipment adjustments, right? And the next adjustment, director fee. Director fee of 9,900 and the interim dividend paid for the original shareholders of 1,100 has been included in the administrative expenses. The interim dividend you can't record under administration expenses. The interim dividend payment we have to mention in changes in equity under retained earnings, right? So you have to deduct that 1,900 from administration expenses, and then you have to mention that under retained earnings. And that director fee information, you have to mention that director fee in note number 2. The company obtained the right of use of building on 1st of April 2022 under lease agreement. So this information is given. Note number 5, right of use of asset as at 1st of April 2021, 2,750. It's given here. And the depreciation you have to for 5 years. So 550 you have to record this in administration expenses. And the carrying amount you have to record in SFP non-current assets. So the balance of the lease is 2,750 and the current interest given 412 and the installment paid 820. So the remaining balance for the lease credit is 2,342. And this interest you have to mention in finance expenses. Okay. And in the current liabilities, you have to split this 2,342 between current and non-current liabilities. So the amount that you are settling in next 12 months, so simply next year, you have to mention as current liabilities. So how to find out installment minus nesting interest? So nesting interest is also given here, 350. So from this 2,342, you are settling 470 in next 12 months. The remaining balance you are settling in the other year, so that comes in non-current liabilities, right? Large, sorry, last adjustment is for tax. Income tax paid shown in the trial balance consists of 320 paid for the previous year and the tax paid for the first 3 quarters for the current year. So first 3 quarters for the and the tax for the total year is 1,200, right? So tax provision for the last year 400 given in the trial balance and the tax paid for the last year 320. So which means you did an over provision 80. So that 80 you have to minus here. So your tax for this year that you have to mention in the income statement after adjusting that over provision is 1,120. So tax for this year 1,200 and tax paid for this year already 500. 80. So the remaining 620 you have to record in SOFP current liabilities. So that's it for 2022 annual company account. So we will meet at 2023 company account annual discussion. Until that, goodbye.